be live. Let me share the link and then we'll get started. Alright, so first things first, I want to cover a couple things. Don't know how much a lot of you guys have been trading in here. I know some of you guys are newer, some of you have more experience, some of you have never traded. So I'm gonna cover like the super basic stuff, and then I'm gonna cover slightly more advanced topics. And again, I don't know everybody's level here, so hopefully someone can learn something from this. But first things first, essentially what does a trade consist of? It's going to be, well, to each his own. Everyone might have their own perspective or opinion of a trade, but for me a trade consists of three things. So your first aspect of a trade is going to be time, the second one is going to be price, and the third one is going to be risk. Risk should honestly be on top. Risk is the number one factor at all times. So it doesn't matter how good you are at trading, so calculating time, price, etc. If you cannot manage and calculate your risk, it's not gonna matter. You got to be able to do all three to be a good trader. So it's like an athlete, you got to be well-rounded in multiple facets of your game. You can't just be good at one thing. So first things first, risk, pretty straightforward. Risk could be calculated in one of two ways, whether it's dollar amount or percent. I prefer percent myself. I think it's always going to be king, just because in the long run you're going to be able to scale a lot easier. Let's say you're trading whatever percent, it's easy, just keep trading the same percent. When you start doing dollar amounts, it's fine, but just in the long run I think percentages are just easier, but dollar amount works fine. So you got to know your risk. Everyone's risk is going to be different. Everyone's trading a different size account, and then everyone also has different everyone has different expenses, everyone has different income. You got to keep all that in mind. It's a lot easier for someone with an income, a really good job or whatever, to take bigger size risk because you have that income, versus someone who doesn't have a job per se, that trading is your only. Just trust me, everyone, your own risk. Just because you see one guy taking bigger risks doesn't mean you should. So risk is that's to each and own person, so you've got to be able to calculate that. And again, I can't give you a set number. You got to be able to know your expenses, how much you can risk in trading. But generally I would say whatever you trade with, that it should be a very small percentage of your total net worth, as opposed to being a big portion of it. So like I said, you have either dollar or percent based risk. You have to do two things. One, you have your total portfolio percent risk, and you have a total percent risk per trade. So those are two different numbers, and again, to each his own, depending on how you trade, your size and all that, I can't really say. But assuming you're trading the maximum, let's say the maximum you can risk, because you're a newer trader, is $1,000. Then of those $1,000, I would try to max risk at a time 12% of that, which is 12% is kind of high for a larger size account. But I understand on a smaller account it's going to be a lot harder to trade, especially with the current contract prices we have right now. It's going to be, realistically, for 12% of $1,000 account, which is about $120, it's going to be really hard to find some contracts for around those prices. If you start going up into what I would consider the maximum, more extreme range of risk, which is around 33%, you'll be able to find something, but 33% risk is really aggressive. If you were to, maximum I like to do is 12. 33 you can do, but just one bad trade, you're gonna lose a big portion of your account. So I will be doing the small account probably this week. You guys will be able to see how I try to manage growing the account within those percentage risks. And anytime you go over those percentages, it's usually gonna work out against you. That's just my opinion. So let's calculate risk, let's say in percent or dollar per, let's see, what's a good setup to cover? I'll do Apple, that's fine. Where'd it go? All right, so when taking a trade, let's see, should I cover that first? I'll cover that first, and then I'll go ahead and do the risk, time, and price. Let's see who's in here. All right. I'm pretty sure you guys are familiar with the candle. Obviously, you guys know how to read a candle. Again, I don't know the level you guys are trading at, but a candle is going to consist of 4 things, right? So this is a 45-minute candle. I don't know if you can see, but these are 45-minute candles. So your candles are going to consist of 4 things, right? This is going to be your open. This is going to be your close. This is your high. And this is your low. So every single candle is going to consist of these 4 components. It seems simple really, and it really is. Trading is really simple if you let it be simple, but sometimes we tend to overcomplicate things. But for a candle, you need to understand, again, I'll put it here, OHLC, that's gonna be your open, your high, whoops, your low, and your close. So for a bullish candle like this one, again, this is a 45-minute candle. I'll go down to a 3-minute. So this is that same 45-minute candle I just showed you guys, right? When you break it down to 3-minute time frames, this is all you see. Your open, your low, your close, your high. And then if you look at the bearish candle over here, you would have a similar scenario. Damn, that was a huge 3-minute candle. Actually, I don't want to put it over. I was gonna add the levels, but then it's gonna mess up these levels. But same thing, you would have your open, your close, your low, your high. You need to be able to identify that on all time frames. And again, this is a 45-minute. If you go to a 3-hour, you will see that this looks different on the 3-hour. This is the bottom of your 3-hour where we left these wicks. It looks totally different on the 45. And then if you go to a 12-minute, it'll look completely different on a 12-minute. And if you go down to a 3, it'll look different on a 3. Why am I trying to get you guys to see this is that every time frame is going to show you different things that you might not see on the other time frames. However, the concept remains the same. Every candle is going to have your open, high, low, and close. So you go up into the higher time frames like the 3-hour, which as you guys can see, we left massive wicks. It would have been hard to enter this on a 3-hour time frame if that's all you were watching. If you go down to a 45, looks a little better on the 45. You could have entered on the open of that 45-minute candle. And again, the lower you go, the cleaner entries you get. But generally for my trades, I try to focus on 45-minute candle opens at minimum. I'll look at the lower ones for executions, but my ideas come off of the 45s. But long story short, yeah, you got to understand that open, high, low, close, that's how candles are formed. It'll help you understand how trades are forming. Where'd it go? Hold on. There it is. So with that in mind, let's say you're trying to enter this trade long. One, you had a couple wicks here. So this could have been a potential buy side target. You also had some liquidity. You can't see it on the smaller time frame, but you had some other liquidity to the upside, right? So let's say you wanted to take these longs. You wanted to calculate your risk. Let's say you have this as your target. That's about a $3.5 move. Assuming you have 1-to-1 RR, you would have 3.5 loss. You don't have to have it that wide. Let's say you had it at these lows, even a little lower. Let's say you had about $1 risk, right? You could have taken this potential setup again with the open, high, low, close. But let me see, where are we at? You could have taken that potential setup off the breach of the break. So there's two ways you could trade on a breakout of a level, like this 45-minute breakout high, or you could buy the lows. I like taking the riskier trades, which means I'm gonna be taking, I like calling them impulse entries, which you take them here before you get confirmation. Confirmation would be a breakout above the previous high, and if we stay above, that is your bullish confirmation. I rather take the trades into these areas. It is a little riskier, but you can have tighter stops at these lows, versus if you enter here, you have to have your stops down here. So it's wider stops, and once you enter up here, you already missed out this move where you could have been green, versus you're barely entering up here and you're break even. Same thing for the sells. You can wait for a confirmation of a breakdown, but I'd rather take the riskier, more aggressive sells with tighter stops, because if you do wait for a breakdown like here, for example, by the time you do get this move down, you already missed about half of the move. And again, how would you be able to capture that? Focusing on the opening of the candles. So for this one, for example, let's say you're watching this, you have your high, well, not your high, sorry, your open. So let me see, let me move over so you guys don't get mistaken. So I'm talking about, you have two candles, right? This one had just closed. Oops. Then you have this one open here. You have your high here. You're open. You're low. I'm gonna go down to 3 minute. Oops. So let's say you're watching this on a 3 minute, right? Again, these are the same levels on a 45 minute. I trade off the 45, it just gives you cleaner trades. Then you come down to something like 3 minute, and you can say, okay, this is the area where the previous candle closed at, and this is where we currently open. If we fall below this level, I'm interested in the sales below here. You could have your stops above the highs. This is fibs. You could have your stops above the highs here, targeting the previous lows, which were these. This would have been your potential trade. Decent risk to reward. It obviously delivered more than that, and if you wanted to hold on the breach of those levels, that's fine, but I would definitely either put my stops to break even or trail my stops in profit. But again, I rather take it on the up here than on a breach of this level. Generally, when you're trying to short the lows, sure, it can work out when we get something like we did here, but you got to be careful when you're trying to short lows for a setup like this, where obviously you're gonna end up taking the loss. So I'd much rather take a breach of a level like this than a breach of support. So short into resistance, buy into support. It seems, I get it, everyone's like, oh, just buy low, sell high. It's honestly really that simple on all time frames. Like here, you get a breakout above the 45. This was another potential move to the upside. Oh, whoops, someone at 15 thought this was a 45. So as you can see on the 45-minute, we stayed above, never really retraced. If you kept trailing your stops below previous 45-minute, you would have been okay to capture this entire move to the upside for the most part. I don't really like how options work. It's a lot easier to do on futures, forex, stuff like that. But that's generally how it should work out. I'm gonna cover options prices real quick. So for something like this setup here, where'd the website go? There is something I want you guys to keep in mind. Should I get rid of these? Yeah, I probably will. Anytime I'm buying a contract, and again, it's really hard to do this right now just because everything's super expensive. But when I'm buying a contract, whatever strike I'm buying, so for this scenario, for example, let's say you were buying the 170s or the 175s. This is about a $5 range, right? You need to see the price difference in what you're paying for the 170s here and the 175s. Why? Because let's say, assuming you had a 190 target on this, how much are they charging you for these contracts and how much are they charging you for these? Again, I don't know. I'm just make up rhetorical prices, but just so you guys can see where it makes sense to buy further out the money, where it makes sense to buy further in the money. Let's say in a scenario where the 170s were about, I don't know, probably not gonna happen, but let's say 750 bucks. This is ridiculous. I'm sure they weren't, just making up numbers. Let's say the 170s were 750 and you could buy the 176s for 250. In a scenario like this, I would much rather buy the further out the money for 500 bucks less. It's a $500 difference in the strikes. So I feel like it doesn't make sense to pay the super high expensive premium. You're better off buying further out the money. But there are some scenarios where, let's say you'll have a contract here in the money for around 500, and then the 175 will be 350. In a scenario like this, a million times over, I'm gonna buy this one right here. Why? Because this is only $150 difference in the premium, and you have a $500 difference here in the between strikes. What does that mean? That for 150 bucks up front right now on the premium, I can pocket these 500. Obviously minus the 150 I paid, but that's still 350 profit up to here, and then anything higher, obviously more profit. But it doesn't make sense to pay this much money for a contract this far out. So it's not too complicated once you understand how to calculate prices of options. What is your potential maximum profit? What is your potential loss? In all reality, let's bring this up. You have a couple things to look at in a trade. So theoretical price is obviously the theoretical price of the trade. Theta is a super important one. You don't need to be able to know how to calculate this exactly, but all theta means is how much time does your contract have left. When does it expire? The more time your contract has, it's going to be worth more. The less contract your time has, it's going to be worth less. So as time is getting ran off the clock, your contract's going to wind down with the time. If you have a lot of time, you don't see the theta decay as much, but if you're holding something like a weekly or a 0DTE, you're going to see that decay happen a lot quicker. So theta's one that is super important to keep in mind, and that goes back to the same things I told you to keep in mind in trading. The three things: time, risk, and price. So here, your time is the theta. How much time do you have in your contract, and how much time do you need for your trade setup to play out? So some trade setups, your targets might tell you, hey, you need 2 weeks for this trade to play out. Sometimes it'll say, hey, this trade will play out within the next 2 days, or this time, or you'll need 3 weeks, etc. So each trade is different. You got to know what you're trading on the setup and how much time that setup requires, and that's where the theta, you decide, hey, am I going to grab 1 week out? Am I buying 3 months? Am I buying 1 month? So you got to know that, right? And then the other thing you got to know is the price. How much am I paying for what strike? Is it cheaper if I buy the strike above? Is it cheaper if I buy another name? Can I buy a similar setup, you know, with a better risk to reward for less upfront capital, etc. So you got to be able to, you know, understand one, obviously how to calculate an option. If you don't know how to calculate an option, how are you going to know what's cheaper than what? So let's try to cover that right now. So like I said, the more time, the more expensive the contract will be. But you got to know one, like I said, time with your contract expiration. Two, the price of what you're paying, the strike, all that is going to be super important. And then obviously what you're risking of your account is also going to be super important. But how you calculate it, other than that, in terms of this, options, volume, and your open interest is going to be super important. That's not shown here, but always look at the volume and the open interest. Those are super important things. But how do you actually calculate the price? So for those of you that don't know, let's cover, can I do half screen and half screen? Let's see. Yes, I can. Let's say, how does that look? Does that look fine? No, it's fine. Let's say you did buy these calls, right? Let's say you bought 170s, how we said. The 170 calls, and the share price obviously 198.15. Let's say you bought the option at the price I told you guys earlier of 760. Whoops, that's not right. There we go. So assuming you bought this contract for 760 bucks, right? So Apple is trading at 900. Theoretically, this is what we closed at, right? 198.15. So at that price, since one contract is 100 shares, you would get the price of Apple at 198.15, multiply it by 100, and this is what you get, right? So then you would get the strike that you bought, which is a 170. You multiply that, you subtract the price difference of what you paid, 760. So 7.60 times 100, 760. This would be your theoretical profit. If you paid more, your profit would go down. Let's say you paid 1.5K for this. Your profit would go down to about 1,300. Right? This is where I tell you guys, you got to see what you're paying up front and what your targets are. Let's say my targets were much lower, or you took it from 190. Let's say you took the 190 breakout. Let's say you took the 190 breakout and you paid 750 for this contract. You're only making quote unquote 65 bucks because you're only $65 in the money. It's not that it's not in the money much, it is, but since you paid a lot of premium up front, you're not really getting paid out. Versus if you would have paid 500 for this, you'd be making more. If you pay 250, obviously more. So you got to see what your target, what your target is on the chart. So potential targets will tell you how much, obviously what strikes to buy, how much to risk, where to put your stops, how much time you need, and all that. But the number one thing is how much can you potentially make. This was a really good setup, which we discussed on stream, the potential of Apple having this monstrous breakout, which it did have. So if you would have loaded anything, you did really well on that trade. But you had to look at the options prices, and that's where I said, hey, maybe these might be a little too expensive, but you're better off buying 175s or 180s or something like that. And again, I didn't look at the specific premiums on Apple on this occasion, so I can't tell you guys. But you do want to be mindful of what you're paying up front and what your potential max win is. If I know the most I can make is $10 on a move, and you're already paying, close to $10 up front on the premium, 700 bucks, 500 bucks, you got to keep in mind that your risk to reward isn't as attractive. But I'll be discussing this during the week more in real time. Yeah, just keep in mind this is how it works for those of you that didn't know exactly how options work. Once you go in the money, literally dollar per dollar, cent per cent that you go in the money, it's, you know, premium that you collect, assuming you know, your contract hasn't expired and whatnot. Expiration is super important, and premium you pay up front is going to be super important as well. Again, these are super basic things that a lot of new traders don't know. Even this here, so someone didn't know about spreads. The spread on this isn't too wide, so look at the bid, $7.95, the ask is $8.10. This is about a $15 spread. Some names have a much wider spread. I'm talking about $100 spread, $58 spread, sometimes even over $100. So if you're trading a name like that and you don't know what you're doing, you pay the ask when you're trying to get into the trade, immediately you're going to be down on the trade. So same thing when you're trying to sell. Don't sell at bid, try to sell at ask. If you're trying to sell immediately, okay, maybe at mid or closer to ask, but generally you want to buy at bid, sell at ask, which is again super simple concepts, but not everybody knows that, I guess. Let's see who's in the chat. Do you guys have any questions about anything regarding options prices? I'm pretty sure, William, you understand how options work, but the newer people that haven't been trading options too long, if you have questions, let me know. And I probably wouldn't I wouldn't do shorter dated options. I keep telling all the new people, stay away from shorter dated options. Yes, you can make a lot of money if you know what you're doing, but if you do not know what you're doing, you're gonna end up getting hurt. So I'd much rather you guys try to aim for those better risk to reward swings, so you guys have more time to manage your trades. But if you want to take those risky 0 DTEs, weeklies, again, to each his own. I just would refrain from it for the newer traders. Let's see. I haven't checked the YouTube chat. I don't know if anyone's on there. Alright, that's fine. So you just share trades. I don't know what time Austin posted that or who Austin is, but I'm not sure what you're talking about, fam. Alright, so one thing I want to talk to you guys about is managing your trades. Again, every trade setup is different. I mentioned time being a super important aspect of trading. When I'm scalping, I try to manage my trades within, if it's a scalp, so if it's a scalp within the first 3 to 12 minutes, I'm out of the trade. Not necessarily have to be out of the trade, but let's say I entered theoretically on this breakout, right? I took the entry on this candle. Oops, where's my, it's fine. But let's say I took, oh, I could do it here. Let's say I took the setup, right? Something like this. Within, again, assuming this was planned to be a scalp. Before you enter a trade, you need to plan, is this a scalp? Is this a swing? But assuming this was a scalp, within the first 3 to 12 minutes, I want to manage my position. Assuming I entered on this candle, this is going to be your first 3-minute candle. This is a tiny. First 3-minute candle, second 3-minute candle, third 3-minute candle, fourth. So assuming you entered here, anywhere on the lows, breakout, wherever here, right? By the fourth candle, which is your 12-minute mark, you have to have managed the trade. So by this point here, you either book the full trade, you put your stops to break even, you booked half of your position, you left runners, you know, do whatever you have to do, but by this point you have to have managed the trade. Again, sometimes you'll have multiple contracts where you can take off 75%, put the stops break even, leave runners. Sometimes you only have one contract where you can't do that. So again, depending what you have in your portfolio, that specific scenario is up to you. But for sure, by the 12-minute mark, you should have managed your trade. In my back testing, I've noticed generally around this time is where you'll get a pullback, retracement, anything like that. So you're better off managing at that point. And then if you give it another 12 minutes, which would be 1, 2, 3, 4, this would be your next quote unquote exit. And if you're scalping, you can take fast trades. You can manage this, and then this could be another scalp with stops below the lows. And then again, after 12 minutes, manage. But every single time, this is your time frame. Within 3 to 12 minutes, you manage your scalp. And again, this is for scalps. So you guys are probably like, oh, what if you're swinging? All right, let me go over that. But again, if you're scalping, within 3 to 12 minutes, you have to manage your trade. Right from the jump, if the trade goes against you, I'd only give it 3 minutes, right? If the trade, let's assume this didn't go up from these lows and it comes down to fill these wicks, the maximum you want to give your trade is 3 minutes. If you want to immediately cut it, up to you, but the most I give my trade is about 3 minutes. You guys have probably heard me on stream. I'll tell you guys, hey, I'm gonna flip my sand timer. So on my desk, I keep a 3-minute sand timer, which if a trade's going against me and drawdown, flip it. If, let's say, it comes down and then flips back within those 3 minutes, great. But if it does start pushing down, stays pushing down, I have 3 minutes to cut the trade or get stopped out on my stops. So let's say I have stops here, and then it closes here. Within 3 minutes, I'll probably just cut it before it takes full stops. But again, within 3 to 12 minutes, you want to manage your scalps, just because these are fast trades. If you want to take another scalp later, that's cool. But this is one scalp, this is a second scalp, right? And then again, off this fourth, you could have taken 1, 2, 3, 4. So you see how this is another 12-minute, this is another trade. So try to break down your trades into 12 minutes for the scalps. It's not always buy at the first candle, sell at the fourth candle. I'm just trying to tell you guys, don't sit on your scalps too long, because sometimes you'll try to sit on a trade for too long. Let's see, where's a good example. Here, for example, I guess this is fine. This was pre-market, so this isn't really a great example because this wouldn't have happened in real time, but let's pretend this is market hours. You have your highs, you have your lows, right? So let's say you bought this and you did sit on it for a really long time, which again, this is way more than 12 minutes. This is about an hour and a half. Let's say you sat on this and then you get this. You obviously gave up all your profits. Sure, it went back up, but assuming these are like 1-minute candles or something, you can get something like this where you pull back. So generally within those 3 to 12 minutes, you want to manage it. Again, whether it's trailing stops, taking some off, whatever. But within those 3 to 12 minutes, most of the time you're going to see a nice move on the options premium. 30%, sometimes 50, sometimes 80, sometimes 100. But yeah, that's a general good rule of thumb. 3 to 12 minutes, manage your trade. Like I said, trim, break even, do whatever you got to do, but you got to do something. And that's for the scalps. And then for the swings, let's say you did want to swing these longs on Apple, right? You would enter on the same lower time frames. So like a 3-minute, 12-minute, you could enter on something like this. And then after you get your entry, assuming this was your entry, you would swap to a 45-minute. So again, assuming this was your entry, you swap to a 45, and as long as you respect the 45-minute lows, you can stay in the trade. And every 45-minute after, you manage. What does that mean? That you trail the next 45, you trail the next 45, you trail the next 45, and so on. And eventually you want to swap to the 3. So definitely if you're entering the swing, I'd manage after a 3 hour. Let's say you did take this entry, 3 hour close, you have to take off. I'm sure this delivered a decent profit. You're not always gonna be able to get risk free with the trade that goes over 100%. But whether it's 30, 50, whatever the trade delivers within that first 3 hour, I'd consider taking some profit. If you don't want to do risk, that's fine. But after the first 3 hour candle is when you have higher risk of a pullback. So let's say you caught this 3 hour, you would book here, manage, and then whatever happens here, it doesn't really concern you too much because you manage. Same thing here, big 3 hour, manage, book. This pullback, breakdown from here, not a concern because you already managed. But even if it's a swing within the first 3 hour, if you get greens, I try to take some. So scalps 3 to 12 minutes, manage. And then for your swings, again, enter on the lower time frame, manage within the lower time frame, and if everything goes well, confirms, lets you hold on. Within the first 45 minutes to 3 hours, you definitely want to take some type of profit. I generally try to do so. If you're trading on bigger size, let's say you took 10 contracts, right? You get this move on the 3 hour, you only get 30% or whatever, that's fine. You can sell 5 or half or whatever. And whatever happens with the rest of the position, whether it's a win or a loss, it's gonna be obviously in smaller size, and you at least secure the profit on those 5 contracts at whatever percentage you did end up getting. So definitely always secure some profits. If you're always securing profits, I just realized the bird sounds super loud in the background. But yeah, if you're always securing small profits every day, you'll be fine. Small profit, or booking off small loss, you'll be okay. So again, 3 to 12 minutes for scalps, 45 3 hour for swings. And then I've talked about something what I describe as static risk and dynamic risk. Static risk is pretty much the risk before you enter the trade. Risk is defined, it's flatlined because it's defined. The minute you enter the trade and price starts fluctuating, green or red, the risk becomes dynamic. So at this point, assuming you entered at the lows and you're anywhere up here, anywhere, you have an entirely different amount of risk that you did at these lows. So you need to manage your risk actively as it continues to obviously move. So you can't just predetermine risk before here, and at least I don't. As the risk changes in my favor, I make sure the risk stays in my favor. I don't let a trade go against me. So what does that mean? Again, just manage the trade, whether it's trimming, trailing stops, putting stops at break even, etc. But something you got to keep in mind. It doesn't have to be a spike. If I'm looking for a drop, I just want to see it happen within that 3 to 12 minute window. And again, it would be executed off of a 45. So let's try this. Actually, I don't know if that would be a good idea. No, probably won't work. I don't know. I was gonna tell you to pick a random stock, random date, but I'm not a replay tool, so it won't work. But yeah, it doesn't matter. It could be to the downside. Let's say I'm watching this setup, right? And I'm like, okay, well, I'm interested in shorting a breakdown of this 45-minute low. So sells below, something like that. And then you could say buys above here. This could be a theoretical 45-minute setup, right? We're trading between here and you're like, okay, well, if we break above this high, we can go higher, right? And if we break below the low, we can push lower. It's that simple. Like, you don't have to be rocket scientists. Just have trigger levels or define your risk. And then let's say you go down to 3 minute. Where's the setup? Here it is. So let's say you wanted to take this setup, right? the minute you get your quote unquote sales below trigger, and again, I would have probably tried to fade from up here, but let's say you did take this specific setup. Whoops. You could have this high below the previous 3-minute candle, enter on the breach. So you would enter on this candle, you have your stop here, and then again within 3 to 12 minutes, 3 to 12 minutes you want to manage. So you would enter on this candle. This is 1. This one is going to be 2. This one's going to be 3. This one's going to be 4 down here, right? So this would be your trade from here to here. It doesn't have to be to the upside. Just generally, the point is within that time frame you want to manage. And then you had this small pullback here. So it's not a big deal. But then you could look for the next trade, right? Let's say you did secure this entire range. If you want to look for a next scalp, okay, well, next time that we break below these lows, I'll enter the trade. You put the triggers. Again, this is easier if you're doing futures or something. You can just set the orders. It's harder on options and stuff. But then this would be your first candle, second candle, third candle, fourth candle, and again, clean 12-minute move. Right after that fourth candle, pop, fourth candle, pop. So again, it's not like a perfect rocket science where every single time after the fourth candle you're gonna get a reaction against you. That's not true. Just statistically, per what I've backdated, you're better off managing on that fourth candle. So again, within those 3 to 12 minutes, if you're scalping, I would definitely try to manage that trade. And again, this isn't a rocket science. Just a rule of thumb I like to apply in my scalps. And then for all scalps, it should be generally conditional orders if you can. I get it, sometimes stuff is moving fast. You have a lot of trades, you can't really do conditionals for everything. If you do have too many trades to that point, maybe you should try toning it down. Trade only 3 names, maybe, especially for the newer traders, 1 to 3 names maximum. But I think conditional orders work best. And like I said, all trades should be point A to point B. Meaning, let's say you did take the setup. 1, like I said, manage within your time frames. If it's a scalp, manage within a 312 minute. You can always retake another short if you really like to. If it's a swing, then within 45 minutes to 3 hours you want to manage. So for this specific scenario here, let's say you took the break here. This is 12 minutes here, and then again you can take the re-short of these levels. This is another 12 minutes here, then another 12, another 12. And again, if you don't want to be that active as a trader, you could have probably just held the swing for that 45 minute to 3 hour time frame. So look, enter the breach here, and then right here you're right around that 45-minute mark. Do you guys see that? So 45 minutes. If you really wanted to take the re-short, you could have taken it up here or even on the breach of these lows here for another 45-minute trade here. Or you could have just from the top held for a maximum poly trade of 3 hours. This is more than 3 hours. This is about 3. So this probably would have been 1 scalp on the swings for me, and then maybe another 3 here. No, this is less than 3. Long story short, yeah, I don't really swing for more than 3. If it's a swing, sure, I'll do days, but generally within that 3 hour time frame, I would like to take stuff off intraday. On something like this, yeah, you would take it off. If you always take profits, you will not lose money, trust me. The problem is when you don't take the profits and those profits end up going red. So again, risk is dynamic, and every time the profits going your way, I'd like to de-risk. Let's say my initial trade size was $1,000. If the trade is now up to 1.5k, 2,000 or whatever, that is, even though it's still the same 1,000 I risked out of pocket, Now it's $2,000 that I'm risking, quote unquote, even though it's not my money. It's so what you guys like to call house money. It's still 2,000 in my account that I'd rather manage. Yes and no. So all my trades are based off the 45 at minimum. I look at the 3 hours too, but for executions, they're all based off 45. So it's always going to be based off the 45. But before the trade, you kind of have an idea of what you want to do with something, if you plan on swinging it or if you plan on taking a quick scalp. So for this scenario here on Apple, you have a tight range, right, on the 45. You have this setup here on Apple where one specific setup, oh sorry, I'm on SPY, excuse me. So one specific scenario on SPY is going to be scalping this range. Within this range, you're going to scalp this. These are what you call the fast trades. So the top zone is going to be your resistance. Bottom zone is going to be your support. You're going to want to short the highs. So every time you come into this level, short, buy here, short here, buy here, short here. Or not necessarily you have to short, but if you are buying these lows, you want to sell some into here. That's again the fast trades. If you're looking for a swing per se or a longer time frame trade, then you can say, okay, whenever we break out of this range, I'm gonna hold on to the swings for the upside. But again, you cannot say while we're in this range, I'm gonna take the swing for the highs. You technically can, but you don't have that confirmation until we get the breakout above the range. So you have to wait. So range, wait. Once you get your confirmation here, all right, take the swing for the longs. And again, that's a different time frame trade. Here within the 45 minutes, within the faster time frames in this range, you want to manage. Why? Because it's a tighter, riskier range. Once you get confirmations on higher time frames to the upside or downside or whichever way, then you can consider the swings. But for the most part, you want to be tactical, and you're a fast trader within ranges like this. You don't always get clean setups like this. Most of the time in trading, you have to stay tactical, let's say half the week. They make you work for it. So you're tactical, you know, risk on, risk off, risk on, risk off. And then finally midweek, boom, you get the move you've been waiting for all week. But you can't just sit on shit all week and then be like, fuck it, when it hits, it's gonna hit. Like, nah, you gotta be managing your risk, and then when it pays, it's gonna pay. But you can't. Sometimes it does work like that where you can just sit on shit and you'll get paid, but generally, nah, you gotta manage, be in and out type. So scalping worth it at a lower time frame, or not recommended. It's not that it's not recommended, but generally, how much can you make in 1 to 5 minutes? You can make money sometimes within 1 minute. Let's say you put your contracts at 30% profit to sell. Sometimes you'll get filled within seconds at 30%. Sometimes a minute. Sometimes 3 minutes. So I'm not saying it's not worth it. I'm just saying you have to manage it accordingly within those time frames. You don't have to necessarily sell within the 3 minutes or the 12 minutes or whatever, but just know that you should definitely have one, put your stops at break even, trailed your stops in profit, take in some partials, anything. So again, it's up to you. If you rather not sell, at least put stops in break even or something. I don't know why you would let a green trade, whether it's 30%, 50, 100, whatever. Each trade scenario is different, but I don't know why you would let it go from green to red. Hold on, let me close my window. I didn't mind the birds, but the dogs, nah. Hold it. 100%. I forgot what I was talking about, but yeah, generally, yeah, you can hold longer, but you do want to manage your risk to a certain degree within those time frames. So let's say you've got this, 3 12 minutes, whatever. Put stops, break even, trail stops, do whatever you got to do. And then after another 12 minutes, manage again. Okay, trail stops, do whatever you got to do, take some partials, etc. So just use that window. So 12 minutes, manage. Again, managing for you might be stops, break even, trailing stops, trimming, and again, each trade is different. On one trade you might have 10 contracts, on one you might have one contract. So I cannot say specifically, oh, every time do this. Again, you gotta learn as a trader when it's viable to do what. If in those first 12 minutes a contract ran for over 100%, that's a specific scenario where I would say, oh yeah, definitely take off at least half. Within 12 minutes you doubled your money, secure half, let the rest run risk free. If within 12 minutes you're barely 30%, obviously I'm not going to say, hey, sell half. So again, each scenario is different, and you got to learn as a trader when to do what. I try to guide you guys intraday on what I'm doing, but again, you guys got to be able to start learning those things. So yeah, just generally 3 to 12 minutes scalps, and then 45 minutes, 3 hours for swings. You're green and gray on 45. Green and gray on 45 minutes. What do you mean? This stuff? These? Whoops. These boxes you see here? Yeah, each box represents 45 minutes. So let's say you're just watching each 45 minute as one individual trade. This could be one scalp to the upside, one scalp to the upside. Whoops. This one could have been either the small sell or the scalp sell, but generally you have one direction. Sure, you might have chop within the zones, but it's generally one move. So this one's sell, buy, sell, and then you have a buy from the lows, sell, buy, buy. But you see how each time it's within that same 45, 45, 45. So if you just break it down to 45-minute time frames, it's easier to like follow along. It's like you just breaking it down step by step. If you tell somebody, hey, make it to, the top of the building, it's like, oh shit, how I get up there, But if it's like, I go step by step by step by step, like, oh shit, easy. So instead of like trying to say, sometimes we'll be like at 520 and people will be like, oh, we're gonna trade at 600 again. And it's like, whoa, chill, take it step by step by step by step. So if you break it down to sub time frames, it's a little easier. At least I think it is. But yeah, the 45 trade's really clean. But yeah, cool you noticed that, bro. I didn't even point that out myself. But yeah, this is Fibonacci level MTF. I have it set to myself. So generally this is supposed to be for Fibonacci's, which I don't use it for that. I just like using it so I can see the 45-minute bars. But the actual tool it does do is this here. So you guys see these fibs? That's with that indicator. But again, my main use of it is just to mock up this 45 minutes. And then I also have the, hold on, I can't see them right now. The 3 hours drawn up. So let's get rid of all these drawings. All right, so you see these big boxes here. Now these are your 3 hours. So you have your 45, whoops, I don't want to draw. You have your 45-minute subsections. And then you have your 3-hour big picture. And then you have your new 45, your new 3 hours. So again, everything I break down into subdivisions. 3 hour zones, 45s. So this is your 3 hour, 3 hour, and then 3 hour. So breakout above this three, you have a breakout higher, and that's what we got here. But yeah, if you guys want these indicators, I have a video on YouTube on these. They're all free. This one right here is ICT kill zones. So you could look it up. ICT kill zones. It's gonna be none of these. What the? This one, I think. ICT kill zones and pivots. Again, all these are free. And then the FTF, MTF, 45 minutes. This one's a Fibonacci. I have a video on all these. I'm telling you, if you want all my indicators, just go on YouTube. But I think that one's this one. Yeah, it has to be. That's the only one I have favorited. Fibonacci ranges. And then you just set your time to 45. And then these are the fibs I set if you want to use those. If not, do your own. But again, I have all this covered on YouTube. Austin, so you're coming from, I'm assuming Simple Stacks, since you're saying you're live room. I thought you were another Austin, but all right, glad to have you here. But yeah, 45 minutes. You're watching everything. I don't know how long you've been trading. But I'm glad you, the fact that you're noticing all this stuff on my chart means, you know, you pay attention to detail, which is good. You pay attention to detail, you're gonna do just fine in my opinion in trading. You gotta pay attention to everything, and the fact that you were able to observe and call all that out on your own, you know, pretty neat, not gonna lie. So nobody, I'm just reading your comment right now. You don't, if you only have one contract, I'm always going to tell you, better be safe than sorry. Take your profit. If it's 30%, 50, 100, whatever, just because I can say, hey, I'm gonna get risk free, hold half, whatever. In the smaller account, if you're taking daily wins, 30%, 50, 100, whatever it is, that's way better than the what if I get paid more. So just stack those consistent small wins. Austin, I did not leave. I got kicked, but yeah, it is what it is. Does anyone have any questions? Like I said, I don't plan on doing actual levels. If you guys have any simple questions of anything, let me know. I could do it, but I don't really want to do levels until futures open. Yeah, they kicked me. Someone asked if I could get a channel, and whatever. Don't really want to talk about it. Not a big deal, but it is what it is. Just bummed out. I lost all my charts. Not gonna lie. I had so much work. All the charts I've set in there past few years. You know, I had a lot of stuff saved in there, so it is what it is. But whatever. Let's see, does anybody have any questions about anything? And then like I said, I'm probably gonna do conditional orders mostly next week, so hopefully you guys know how to do that. And like I said, if you guys are trading on Robinhood, unfortunately they don't have conditional orders, so if you guys could switch somewhere else, that'd be cool. It'll benefit you in the long run, and if not, you'll be fine. Just a little easier if you can do conditional orders. Yeah, glad you're here, Austin. Like I said, I was a little, I thought you were another Austin, someone I know, but I never thought you would have came from Simple Stock, so that's cool. Thinkorswim has, yeah, Thinkorswim has it. Webull has it too. So ideally how a conditional order works, let's say you bought this breakout, right, that we were discussing earlier, and you say, well, we have a really large wick up here. Potentially, I would want to take my calls all the way into that wick, and then I'll, you know, take my profits into that level or trail stops or whatever. You can take a conditional order, entering the trade. You can do it two ways, to enter, to exit, so multiple ways it works. But let's say you have a conditional order that says, hey, buy a call for me once we tag this level. So once we come into this level at 521.45, you would set the conditional to buy, let's say, buy 525 call at, and the cool thing is you set your, well, I mean, it's cool if they fill. Sometimes you're a little too cheap on the prices and they don't get filled, and then you come back and see the trades would have been in TP and you're like, wow, I never got filled. So be mindful of that. But let's say the conditional order at this level, you can say buy 525 calls at 150 or less. So you can do that. You can say buy it at this price or less. That way, if it does come into your target, you're not overpaying for a trade or something. So you'll say buy 525 calls at 150 or less when SPY equals 521.45. So theoretically, this is what a quote-unquote conditional order looks like on the books. So once we trade, let's say you set that order once we're up here, right, at EQ. So it comes into this level. Once we are here, it will automatically fill you. Once you come into 521, which is here, it'll tell the, the order book's okay, and then it'll check the prices. If it's at 150 or less, it'll fill you. Just because you set it at 150 or less, it does, let's say at here at the lows, once it does trigger, let's say the contract's trading for 125, they're not going to fill you at 150. They'll fill you at whatever the current prices are. It just needs to meet your requirements. So unfortunately, and it's happened to me before, let's say you do set something like this, like, okay, fill me at 150 or less. Let's say literally the low of the day here was 153. You're not going to get filled. It's literally going to do this entire move without you. So that's one of the downsides. And like I said, don't be a little too cheap. Generally, you'll be okay, but that's something to be aware of. So once you enter the trade, again, you can have that conditional for your entry, and then you can have another conditional for your exit, which will be sell 525 calls at, let's say, 3 or more. When SPY equals 527.40. So this would be your conditional exit, and automatically when SPY comes into this level, it's going to sell your contracts at 3 or more. And again, you got to be careful. If it does not hit that price, let's say it hits 299 and then it drops, you did not get filled. So just be mindful. But yeah, that's theoretically how conditional orders work. It's pretty neat. If you want to come in the morning and we're trading like in a range, you'll say, hey, you know what? Just set conditionals within the range, set your risk, walk away for your day. For the people that have work, this is amazing. If you want to go hike, you want to go have breakfast, do whatever, you have your risk managed within that range or whatever with the conditional orders. So that's what I like to do, and I want to teach you guys to do more often, or start doing it, because it just makes your life easier. And the trade is managed the minute you enter. Risk is managed. You don't have to watch tick by tick. Win or lose, same outcome. If it goes to TP, cool. If it goes to drawdown, you're gonna get stopped out. But you don't have to watch, minute by minute action. Is main one. Takes a couple days to transfer. To Webull? What are you talking about, bro? They both have it. I do think Webull's a little easier if you're a newer trader, but they do have it on both. So if you need help on either one, just DM me, bro, in Discord. Oh, you're transferring from Robinhood to Thinkorswim? A lot of people like transferring their entire assets, which you can do, but the faster route, if I'm assuming you don't have a lot of stuff in there, like a lot of stocks, options, whatnot, you're better off just liquidating your account and transferring it over. You can do it same week. But if you do transfer your entire portfolio, yeah, it's going to take a few business days. And like I said, I'm not trying to tell anybody not to use Robinhood. It's okay. I'm not saying you can't make money. It's cool. But just eventually do try to transition from it. Yeah, that's cool. Yeah. After this week, or with whatever profits you make, definitely want to pay yourself too. But if you want to put them into the other account, that's cool. Does anyone have any questions on trading basics, levels, any of the stuff I covered? Price, risk, options, time, something which I don't think a lot of you guys have or even think of, which is the time aspect I mentioned. So I'm gonna share this tool. I don't think I've shared this before, and it's not because I don't want to like share it with anyone. I just haven't really covered it. So this here is what you call a Gambox. I have my settings on it a little bit edited, so it looks different. But generally, I use this to for timing stuff. So let's say you want to calculate potential next move, extension, retracement, anything. What's a good name? Let's see Bitcoin's moving right now. Okay, so I'm gonna take this low to this high for my time extension, right? You have your low. It's not big enough. I need a bigger data set. All right, I'm gonna use this one to, I guess that's fine. So this would be the start of the extension, and I would calculate it from before the drop, right? Actually, I'll go up here. I'm just trying to find a clean trend to calculate, but I don't really like anything on this. All right, I'll use this one. So all I'm doing is grabbing this high to this retracement low to get a time, like a time reference. This is where we currently are in price. If you can see, the fourth extension of this move was right around the top where we got the pullback. So I'm gonna move this up just from where it is. So again, here, straight up. Here where you have the fourth extension was your 85,892 top on this. And then you can just repeat it again. Move this over, overlay your 0 over this, and now you have a new time continuum. We are currently trading into the 1 and 1.5. So coming into this area here between the 1 and 1.5, you're gonna have a potential reaction here. So into this level, you want to watch for a potential retracement back to the lows or your breakout level above this. And if that, whichever one happens, you'll get your targets into your fourth extension over here, which would be around Tuesday. So how can that help you, or how do you use it? Let's say we're going to start retracing from here, which Bitcoin does look like it's starting to do that. Let's say I'm trading right now. I take the short, right? I take this short, assuming we stay below these levels between the 1 and the 1.5. I'd stay in the trade. You can potentially take profits into the 2 and 2.5. So manage into 2.5 here, which would be tomorrow between, it's a pretty big window, but tomorrow, and your fourth extension would come into Tuesday afternoon. So Tuesday into the close, you could potentially take more profits, assuming again, the trade is valid. So this is how you calculate time. So you can calculate levels vertically, right? You calculate time horizontally using tools like the Jambox. And again, that's not what that's used for. That's just something I personally tweaked it a little bit to help give me time reference. It's the same thing as the Fibonacci price. You know, you have your 786, your 0.5, 1618. I just use standard deviation for the time. I could use fibs if I really wanted to. You know, I could do 0.618, whatnot. Just prefer the clean levels on this. Not necessarily. This is better when you're calculating something like a swing, where you want to know, hey, how much time can the next leg take, etc. Let's say, so like this entire chop before the next move took quite a bit of time. That's fine. Oops. Leave it. That would be a really long time. I hope not. So if this is correct, again, I hope it doesn't take that long, but we might not get the real move on Bitcoin till June. The last time we chopped on Bitcoin, we chopped for this amount of time. This is roughly for around how long we've been chopping. If I wanted to be conservative and bring this into the top of this would be about start of May. So theoretically, I wouldn't consider nothing major happening maybe, or at least any major lows or highs or anything, until maybe into the start of May 6th to June 11th, mid-June. So we can do anything within these ranges, right, within this time, and still have plenty of time on the clock to do a major move. So I'm not telling you anything, just, you know, this is the current range we've been in. We have decent amount of time on the clock, about a month. We can chop within here, fill wicks before getting a true move breakdown to like 70k or anything, and you have plenty of time to do that within you know, the ranges, targets, moves we've done. I don't see why it wouldn't be possible. Let's copy this. So you have your high, your low, bounce, low, whoops, no, I went too far. Something like this, right? Copy paste is where we're currently trading at. Again, I'm not saying this happens, but let's say we come into this wick fill. Oh, it's got so messy. Whatever, that's clean enough. So this is the wick fill we're talking about, right? Let's say at some point we come into this wick fill. You can consider fading off this level, but all I'm trying to get you to understand and see, this is the time aspect. Forget the levels. The levels aren't important here. I just want you to see how the time works out. All I did was came and copied literally this exact move from here, put it over where we are, and within the same time window I'm discussing to you, it lines up with my targets perfectly. These aren't my targets. These are harmonic targets calculated by, you know, bot. But you have a perfect 57k low, 70k bounce, and all this I drew by hand based off of the levels to the left. Line up perfectly with the harmonics, and they're all within the time window, whoops, I just discussed with you. So what if we're trading at 57k mid-June on Bitcoin? As early as mid-May, May 10, what if we're like at 70k? Again, not saying these are targets to trade, just give you an idea of how the time and levels can potentially work out, and you can use that as a tool. And this is focusing on the daily time frame. You can again break down to the lower time frame, how I was discussing with you on the 45, on the 15, on the 3, to get smaller breakouts and breakdowns. Like here, for example, you have your high and your low, and you can use this on the smaller time frame trades. What time frame preferred? Higher time frame for swings only. What is your question? What time frame to execute? The 3 hour. The 45 for your execution on the entry for like, you know, the entry on the smaller time frame, but you want to base it off the 3. So your thesis is based off the 3 hour chart, and you already know I'm really using the 192 over the 3, but yeah, 3 hour, and then you just go down to the lower time frames to execute. But let's say you do want to take the swing, you want to be watching the 3 hour time frames. So for example, here you have 3 hour lows, 3 hour highs, No trades within this range for a swing unless you're above or below. And again, I'm not looking up. I'd much rather wait till they fill that wick we discussed. Once they fill that wick, I'm interested in the sells. And then if you do get the breakdown below this range, which is around, let's say 83.5K, you can maybe consider this move. But yeah, go for the 3 hour. Obviously everything though, bro, because you gotta cover the, that's assuming you've already looked at monthly, that's assuming you've looked at weekly, daily, everything. So let's do that. I haven't done that today. Let's hide indicators. I'm gonna do it on gold. Actually, I'll do it on here, this too, that's fine. But so what you want to see, I'm on my monthly, right? Same thing I discussed with you guys. You want to see your, I'm gonna save some templates. These are some massive ranges on Bitcoin. Okay, so this is your previous monthly range. This is your current monthly range, right? So I have labeled the previous, the monthly. This is where currently we're trading. So this is your quote unquote playground. Not really interested in doing too much within this zone. This is a massive zone, by the way. So let's say you're trading within the zone. If you're shorting here, which I'm not saying to do that or anything, I just want you to be mindful of the area you're shorting at. If we do go back to retest the highs, you have more upside risk than potential downside profit. Just so you can, you know, visually see stuff like that. If you're trying to go long closer to the lows, better. Trying to go short closer to the highs, better. But at this point, this is where we are. These are the levels. So if you're above the open, you'd want to see a pushback towards the highs. But as long as we're below the open levels, you want to see pushback down towards the lows, right? That's what you're seeing on the monthly, just straight off the bat. And then you're going to go down to the weekly, see if you can get some better levels to look at. So you still have a little bit of a chop here within this range. Go down to daily. And again, still a lot of noise, not much to do, but you have clear levels based off of the monthly. You just want to be super tactical because Bitcoin, let's see what's a good candle. You can't really see it, but this entire top range happened in one day. So this green, well, not that one. Oh yeah, this entire green candle was a one-day move. So low, high. Imagine you're shorting here and you get this, or you get it to the downside and you're trying to get along there, right back to the lows. So Bitcoin is something you want to be super tactical on, just because trust me, like if this shit is, you're going against it, you can get hurt real quick. You'll have a $1,000 move in 1 minute. And if you're trading on leverage, straight, you know, SPY or something, it's gonna cost you some money. So be mindful of that. But again, above the monthly open, which is 84 point, let's say 350 just to be generous, bulls have control. And then if we do start flipping below that monthly level, we'll see the move lower. But again, you go to your monthly, you get your clear levels. Where do you break down? Where do you have bullish pressure? Where do you have selling pressure? And you go down to a weekly, daily, 3 hour, try to get more clues. Bitcoin unfortunately has been coiling here for over a month, so it's not too easy to get clear levels. But if you're trading something nicer like gold, for example, it's a lot easier. Let's say your monthly. Let's get rid of these. You have your high. Your open. Come on, bro. What the was low? Did I not save low? So okay, this one I'm not gonna cover the what do you call it? The high, just because, sorry, the close, just because it's right at the high, same levels. But then you come down to a weekly, daily. So daily, you have this small mini range, which looks a little better on the weekly. This was where we broke out above the last time. So technically, as long as you stay above this, you can be bullish and bearish below. And you would go down to a daily, down to a 3 hour. And if you're looking for a potential flip to the sell side, all you would need is a breach of a daily level. So we are trading up here, right? This can be moved up depending if the target moves up higher. If you want to be tactical, let's say 3. So cool, right here. If we get a breakdown below this level, you can take sells. Targeting these levels we were back at, right? So you would watch these levels. Once you get the break below, you can target this. And if we get the break below here, you'll get more sell side. To retest the previous highs we were at, and then if we break down below the previous highs is where you can potentially have this. And obviously if we lose these lows, that's where you're going to start losing weekly lows. So this is what I drew, right? This is a weekly level, just to give you an idea of, you know, where we're at. But this is still possible, and this, and that's how you would break this down for a flip on the smaller time frame. You don't take the short unless we get the breakdown. And unfortunately last week, where is it? Here. We took the sells on gold, paid really well on this drop. And instead of trying to get long on the flip, I held the sells and added higher. So obviously that costed me a little bit of money. That was a mistake on my end for being stubborn on the trade. But at this point, this week I will be watching gold, see if we get the flip below these levels for the potential short. But yeah, coming into support here, which is the area we broke out from. Let's move this over. It's gonna take forever. So this is literally a perfect tag of the area we broke down from, which was support. So previous resistance becomes forward support, and this should have been an area to book profits on gold. And like I said, I did not do that, did not book profits, and then ended up adding to the sells higher, costing me some money. It is what it is. And then this week, like I said, if we get a flip, that's how you would take that short setup. If you're looking for the longs on this specific scenario, like I said, when you're in a range, you don't do anything. When we were in this range, you don't do anything, and it is okay to sit on your sells. You wait for the trades to develop and give you direction. But at the moment that we broke above this range, that should have been your sign to exit your sells, and you could have still exited with a really nice profit. And if you were trying to get long, the minute you take the breakout above the range, this could be your potential scalp to the upside. So just keep it tactical. The minute you start being stubborn and stuff, it's gonna cost you money. So again, I'll do a live setup later once features open, kind of see where we're trading at. I'll give you guys a game plan for the week. But yeah, like I said, I was just covering super basic trading comments for the new people. ICE chart, What about it? We're probably gonna break to the upside on this, not gonna lie. Assuming we hold these lows. We still have this target here. Open gap. And we're trading in this range, so I wouldn't do much here, not gonna lie. These ranges are massive. If you are gonna short, you're better off shorting in the top range. And then the only thing I don't like is we have this little gap here. Costco also has an open gap, which we're right about to close, so that's something I'm gonna be watching. If Costco closes his open gap, maybe I'll try reshorting it again. And then we close right on a point of control, so 1020 level to watch on Costco. A lot of names I just want to see us give us a tiny bit higher of a squeeze up so I could short. Like SPY, maybe 587 is gonna happen. We close right at the point of control, right here. So your next target zone is going to be 0.5. Let's say we gap up, open anywhere around here. You would want to watch this as your next trigger, which we can, you know, chop here for a bit. This is way too much time, by the way. I just realized this goes out to June. I don't think this is right. We'll see. But yeah, long story short, well, we'll just see. Like I said, I don't want to do levels. Let's wait and see where we open at. But there are a few gaps to the upside that I want to see close before potentially rolling over again. Oh, nice. 164 wick. What are you looking at, the daily? 3 hour or what? This? I mean, sure, but AVGO also got upside wick. Look at the targets we had, bro, and that shit's going crazy. I'm pretty sure it's gonna fill that wick, especially with the chip news we had over the weekend. This is an area I'm interested in reshorting AVGO. If we get to 15-ish again, I'm reshorting here. Can't happen by this week, can happen in 2 weeks, 3 weeks, a month. I don't really care when it happens, but when we're trading back in these levels, I'm gonna be trying to reshort AVGO on this wick fill. And this is a wick fill from earnings. But yeah, there's a few names that have upside still. So like I said, let's see where we open. The futures gap up. If you're in short, obviously that's gonna suck for you. Don't have much, so I wouldn't mind a gap up. At this point, the sooner we get to the upside targets, the better for me, just because I don't plan on chasing too much here. If you didn't get long at the lows, this is not there to start chasing. I'd much rather sit cash patiently, and if we do get into these targets, I'll consider shorting or on a potential market structure shift if levels allow. But for now, this is the potential scenario I want to see. And like I said, with the chip news this weekend, maybe we get a gap up, chips gap up. Like I said, that would not necessarily benefit me, but the sooner we get into these targets, the better for me, because it's the sooner I can try to short this. For now, I'm just gonna sit and see what happens. Let me know if anybody got any questions about anything before I hop off stream. Like I said, I'll be live later after futures open, give you guys a weekly game plan, and then I'll be up pre-market tomorrow, give you guys trade ideas for the week, trade ideas we're gonna look to execute, and you know, the regular stuff. To the right, they change, so I can't, so it's not like I use one specific scenario. Let me show you. Depends on my I have my indicators off. I was like, where'd they go? So it depends what I'm looking at. On some charts that I'm trading on the faster time frames, I have shorter time frames, but on these specific ones, I have 1 week for the first one, I have 1 month, and I have I think 3 months. Let me see, 6 months. So you could edit this to whatever you like, but generally all I want to see is where we've been trading, how big is my trading range. So is my weekly range, monthly range, 6 month range. So pretty big range on this. Some names haven't moved too much, you have smaller ranges. something like PM, smaller range. Generally, the tighter the range, the better. So something like this, for example, you can see the shift in structures. So we have your high, your low. You can clearly see where the momentum shifted right along here. Let me full screen this. So right around here, where you had your monthly lows, we dropped below. You had that massive selling pressure down into these lows here. And we're currently trying to reclaim that monthly low we lost, right? So we want to see what happens into this. Do they manage to reclaim this level they lost and go back for these highs on the range? Or are they going to get rejected again into this level they lost and try to go down into these levels we have noted, which is an open gap from earnings? But you can modify these. These are free as well. So PO3 is indicator name. Austin, I don't think you, let me see if I can find it for you. Hold up. All right, here you go. So the video I just sent, it covers all the indicators I use, what uses they have, how I personally use them, and they're all free. So super neat harmonics indicator, which is really, really good. This one you see here with the targets for PM, they're calculated by the harmonic. If I go to a 3 hour, it's gonna have different targets on 3 hour. If I go to a 45, different targets. So depending what time frame you're watching, it automatically calculates the harmonic patterns for that time frame. And like I said, everything in that video is free. So yeah, pretty neat tools. Everything I use, you don't have to use all of it, but watch the video and pick what you like from there and apply it to your charts if you'd like. But all right, I'll catch y'all. I think that's gonna be it, unless anybody got questions about anything else. I'll send you guys the update later, and then if not, I'll see you guys tomorrow morning. If you have any questions, just hit me up in the Discord, especially the new people. Let me know if you need help with anything. Oh, I should cover that real quick. Actually, you know what? No, it's fine. I'll do a separate video on the Discord. Every channel, how it works, where stuff is posted, trade ideas, and all that. But yeah, hit me up if you guys got questions about anything. But all right, unless anyone has questions about some, I think I'm gonna catch up. Should I be paying 120 for TradingView? I just saw your comment, Ramiro. I'm not sure. I cannot get my screen resolution to work for your YouTube on indicators. Did I record on a really wide resolution? I might have. I'll check that out. Yeah, yeah, William. If you're always securing profits daily, instead of worrying about how much more you can make, you'll be a lot better. I don't know what you have, Ramiro. I personally pay yearly for TradingView, the premium one. I don't recall exactly. I think it's like $750 a year or something like that. If you get it when they have like Black Friday deals and stuff, you can get it half off. I think it comes out to like $350, something like that. So it's not terrible. I think it's worth the money. I use it a lot for charting. You can get free charting on stuff like Thinkorswim. So if you don't want to pay for it, you don't have to. But I do think it's worth it. So up to you. But you can definitely be just fine with the free version of TradingView. I've done it myself before for a long time, and you'll be okay. Only downside is you can do maximum 3 indicators, which honestly you don't need that many indicators to be trading, and you'll still be profitable. I think maximum charts they let you do is maybe like 2 or something. But one workaround you can do. So let's say you don't want to pay, right? You see how I have 8 charts up? If you're on the free version, like I said, I don't know exactly, but I think maybe you could only do I'm not sure. It's 1 or 2, or something like that, but you can't do a lot of charts. What you can do is just open a bunch of tabs, right? So let's say you open one tab. then you do this, you do this, then you open another one. And that's a workaround to get it for free. So again, if you don't want to pay, you just want to be sneaky, do little tricks like this. Look, I just showed you how to get 3 charts for free on a free version. Again, I'm paid obviously, but if you were on a free version and you don't want to pay for multiple windows, just open multiple tabs. And now you got a little workaround. So if multiple charts is an issue, this is a way to get multiple charts for free. Multiple indicators you probably won't be able to get away with unless you have maybe like different indicators on different layouts or something. But again, it's a matter of, is it worth it to you? To me, I definitely think it's worth paying for it. If you don't want to pay for it yourself, that's fine. A lot of workarounds to, you know, make it work. But all right, I'll catch y'all. Hit me up on the Discord. Have a good Sunday. And you know, hopefully you guys are ready for this week. We got earnings kicking off, and should be a pretty stacked month. So stay focused, take it slow, one day at a time, one trade at a time, and y'all be straight. But all right, I'll catch y'all.